Hello and welcome. The team from B11 would like to present to you our recommendation for your investment opportunities. Firstly, we will take you through upcoming market and industry trends. We will then follow through with our recommendations for the acquisition and exit of M1, candidates for a new management team, stakeholder perception, as well as your fee and investment structure with Red Sea Investment.
The current market conditions provide an ideal landscape in which a buyout can take place. As the world climbs out of the global downturn, the Singapore economy is forecasted to grow at 6% for the coming 10 years. You can also see that the consumer disposable income will continue to grow at an average of 3%. Within such a technologically focused society, this will have a direct correlation with the increased demand for new telco products, leading to a projected annual increase of 14.67% in communication expenditure up until 2015. The rising importance of m-commerce will also contribute to the need for an improved network. This can be achieved via a 4G network, where connectivity is aimed to be global and information packets downloaded much faster. Issues which the committee may need to consider are the activities of M1's competitors. StarHub already has access to 4G technology through its association with NTT and NTT Docomo in Japan, who are currently trialing 4G technology. Because of this, M1 may not expect to maintain a first-mover advantage for long. However, we predict that StarHub will be focused on implementing Singapore's next-generation national broadband network.
There are two main approaches which the investment committee can adopt in acquiring M1. The first is to acquire a controlling stake in the firm, either by purchasing equity from the public markets, which would be excessively time-consuming and costly, or from an existing institutional shareholder. A quicker method, although since no single shareholder currently owns an outright controlling stake, Siddiqui may still have to purchase equity from more than one source, making the process tedious. The second approach involves a complete acquisition of M1. As Siddiqui and RSI combined do not have the resources and expertise to undertake such a task on their own, it is suggested that a joint venture be entered into. We have chosen Verizon Wireless as the joint venture partner. Firstly, Verizon Wireless has a significant head start in the research and development for 4G networks, as they have already commenced 4G trials. In addition, Verizon Wireless will also contribute capital for a corresponding proportion of equity. It is likely that Verizon Wireless will be interested in this deal, as it offers them access to Siddiqui's software suite and introduces a route by which Verizon Wireless can enter the relatively saturated Singaporean telecommunications market. A partnership with Verizon Wireless also allows Siddiqui to potentially leverage the software suite into the American market. The risks with such a proposal are that Verizon Wireless may attempt to acquire M1 without Siddiqui's help, as they certainly have the resources to do so. However, Verizon Wireless lacks the crucial expertise in the Asian markets which Siddiqui can offer. Our attention now turns to the perceived value of M1 and our recommended valuation. The current valuation of M1 indicates a range between $1.5 to $2.4 billion based on price-earnings multiples and a market capitalization premium. Considering the valuation football field depicted, it is suggested that the acquisition price lies between $1.75 to $1.9 billion, which is roughly a 16 to 26% premium over the current market capitalization of M1. A discounted cash flow analysis was then adopted to value M1 after implementation of the 4G strategy. Some significant assumptions included: research and development expenditures were expected to be in proportion with costs reported by NTT Docomo. The debt-equity ratio is expected to remain similar. Weighted average cost of capital was calculated to be 6.25%. Cash flow growth is expected to remain steady until 2015, when the introduction of 4G will increase cash flow. The growth in subscription rates are to follow a pattern similar to growth of 3G reported by the IDA. Average revenue per user is expected to remain similar to figures in the annual report, adjusted for inflation. The present value of M1, taking into account 4G services, is hence roughly $3 billion. Changes in the discount rate are expected to affect our valuation as shown.
We plan to exit from the industry in 10 years' time in 2019. In fact, the decision to sell should reflect the broader financial environment. Ultimately, RSI and Siddiqui perceive M1 as an investment rather than a long-term strategic move. Taking this into account, we can either sell to Verizon Wireless or another competing firm who is specialized in the telecommunications industry. Alternatively, with Verizon Wireless's approval, Siddiqui can undertake an initial public offering of M1 in order to liquidate and realize their investments. From the timeline, we would approach Verizon Wireless in October 2009 and seek IDA approval in January 2010. The buyout of M1 and the appointment of a new management team will occur in March and April 2010 respectively. The rollout of the 4G network will begin in 2014 before we exit the industry in 2019.
When implementing a change management strategy, the following are important considerations. Readiness assessments involve surveying the company to gauge whether it is open to change. M1's underperformance and recent loss of Neil Montefiore indicate readiness. Sponsorship involves engaging senior managers to become leaders of change. Candidates must be assessed according to their capabilities in their associations. Communication is a vital aspect in building awareness. M1 and related parties must be aware of the new direction and goal. Education and training provide support in developing skills and knowledge to help employees move through the transition. Measurement systems, rewards, and reinforcement provide a check and balance to ensure a smooth process of acquisition and integration. Review at each milestone is recommended. When selecting new senior managers, track record, experience, relevant industry knowledge, and shared vision are essential. Their business credentials will play a major role in the implementation of a change management strategy. We would like to recommend Lowell McAdam to become the new CEO. With a track record of success in implementing new products, McAdam has the ability to successfully launch 4G services in Singapore. We also propose Liu Ai Li to become the new COO. With a background in the operations of the Asian mobile industry, Liu can establish a long-term goal for developing the 4G network. Thirdly, we suggest that Karen Koi take up her former position of CFO. Her promotion to acting CEO has shown that she is a leading figure in M1, and her association will aid in integrating the new team. Her understanding of the business will greatly support the change management strategy. When deciding to acquire a new senior manager, action should be taken as early as possible because the IDA must approve the appointment for competition reasons. A minimum of 1 month before deal completion should be given to allow the approval of the new appointment. Another concern would be the availability of suitable candidates to become the new senior managers.
Factors critical to the success of any integration activity include the formation of integration teams, continuous and frank communication, and strategies to outline defined business goals. We have considered the possibility of an integration team consisting of managers from both M1 and Verizon Wireless to build a master schedule of what should be done, by whom and when. Additionally, work teams should be established to determine how each function and business unit will be combined. Before there is any public announcement of the strategic alliance, we advise the committee to prepare a communication plan to aggressively support the integration. This should be addressed to stakeholders such as investors. Persuade the major shareholders, Keppel Telecoms, SBH Multimedia, and Sunshare Investments to sell their share in M1. They may choose to do so because they have held M1 as an investment for over 10 years and may see it as a suitable time to harvest their wealth. Also, M1 currently only operates in Singapore, a market that is relatively mature and saturated. Employees, communicate frequently and honestly how the merger will affect employees. A properly structured organization should support, not stagnate, the acceptance of a new culture. When integrating corporate cultures, there should be a balance between the need for control and the need for flexibility. To ensure a smooth integration, the firm should establish shared goals to foster desired behavior and shared standards based on best practices. Part 5A of the Telecommunications Act stipulates that any acquisition requires approval by the Infocom Development Authority of Singapore. From a business and mobile communication point of view, the proposal to use M1 as a testbed for their 4G software will enable higher data transmission rates on an anytime, anywhere basis. This is currently unattainable using the 3G wireless infrastructure. For entrepreneurs, the ability to check their emails 24/7 with faster broadband speeds will promote business efficacy. Also, the joint venture will create new additional jobs, a goal in line with Singapore's in 2015 master plans.
The proposed fee structure that we have constructed consists of a 2% management fee and a 25% carried interest. In order to convince RSI to commit 100% of the capital, a lower than average management fee is required. Industry management fees range from 2 to 3%, thus a 2% management fee will appeal to RSI because they are long-standing and important clients of Siddiqui. Whilst most carried interests are approximately 20% of net profits, Siddiqui should put a premium above this average to signal their confidence to RSI. Thus, 25% carried interest would provide the necessary alignment of interest to create a profitable investment in developing the 4G technology. As highlighted previously, the investment structure we have recommended is in the form of a limited partnership. The lifespan shall last for the 10 years until our proposed exit from the M1 investment.
In conclusion, we would advise Siddiqui Capital to undertake a joint venture with Verizon Wireless. Please contact us for any further questions.